Back to the markets, I'm seeing some red, not as much as we were a moment ago, but look at the Nasdaq, ouch, down 121 points, that is 0.86%. David Stryzewski with me this morning. I want to talk about inflation. Is inflation, in your view, your opinion, is it coming back?
Hey, good to be with you here, Stuart. Yeah, I think inflation's back. I think we're a long way out of this fight. I think there's a couple of things, though, to highlight here. One, core inflation is based upon services and wages right now. We've just been recently seeing union shutdowns here with railroads, American Airlines, UPS. If we're going to be paying more for employees, that's going to raise the costs for everyone else. That's, of course, inflationary. And we're seeing that trend continue. The U.S. was recently downgraded by Fitch. And then also Janet Yellen just announced to us that we've got about $2 trillion more that we're going to need to be coming up with here in order to make our economy buoyant here for the end of the year. But, when we look at our GDP, this thing's out of control right now. We're not doing the hard work of cutting costs. We're just going to print more and sell more treasuries right now. So this $2 trillion need that we have through the end of the year equates to $8.5 billion in deficit treasury spending that we've got to come up with on a daily basis, $8.5 billion. So that means that the cost for our nation to run is going up. And it's going to cost a lot more dollars to do it. Of course, that's inflationary. The third part to this is that the Saudis were just introduced into the BRICS alliance. And so, oil prices have just skyrocketed 8% plus here in the last 5 days as, the Saudi and Russia are looking to extend these supply cuts. So, this production cut is anticipated to be about 1.5 million barrels a day in the fourth quarter of 2023. Okay, so if we have a high demand, low supply, prices are going to go up. Of course, that is also inflationary. So again, higher oil prices, this recent data, I think it's going to make the Fed's job a lot harder here going forward. And we might be seeing CPI rise on some of these things. And of course, last week we just saw PCE tick up.
I want your response to China banning government officials from using Apple devices. What's the impact there on the technical and economic relationship between China and the United States?
Well, there's no question, Stuart, that there's a decoupling going on right now between China and the United States. I mean, the United States, we've been reshoring and friendshoring some of our industries here. And so they've just now taken a stance against Apple, largest organization in the world, saying, government officials are not going to be able to use their iPhones. Of course, what they're trying to do here is suppress the value of Apple stock or their expansion into the Chinese market, which has been a big part of the iPhone expansion here, as it's been kind of contracting as these phones are getting so good. But, one of the things that Apple's done is they said, hey, we've got privacy standards. And so we're not just allowing, some of this stuff to be out there. But if there's, a legitimate an inquiry into this from a legal department, then they'll share things. But otherwise, they keep it private. I think China is just, pushing back here. They're trying to pick their favorites as we're, changing some of our back office here to India, et cetera. So
it's hurting the stock. As you can see on the left-hand side of the screen, you're down $5 on Apple now, and that's 2.8%. David, thanks for joining us. See you again real soon. A new report shows